What is up, everybody? I hope you guys are all having a fantastic day. Some pretty big news coming out across the ecosystems of crypto and digital assets today. Notably, yesterday, I put out that video and stating that sometime between 4 and 6 p.m. Eastern time, we may get the green light on all of the spot Bitcoin ETFs, and lo and behold, that is what occurred. SEC gives Bitcoin ETFs or exchange traded funds the green light. I talked about the false start on Tuesday with the quote unquote SEC hack. But the SEC did give their approval yesterday for I believe all of the filed spot Bitcoin ETFs. The regulator's highly anticipated move expected to make Bitcoin investing more accessible to Main Street investors without requiring them to own the digital asset directly. So obviously a huge day for crypto in general. One place you won't find a Bitcoin ETF is Vanguard. Vanguard spokeswoman told CNBC that the asset management giant has no plans to create a Bitcoin ETF of its own or even to offer funds from other issuers on its trading platform. I did see some posts out there stating that Vanguard is only allowing the selling of their GBTC product, but not allowing the purchasing of spot Bitcoin ETFs through Vanguard as well. A lot of people saying that they're moving retirement funds, things like that, away from Vanguard. I will say I think most of this is just noise. Again, we're like one day into the weeds here. I am not going to give you financial advice or anything like that, but Vanguard will 1000% be offering Bitcoin ETF purchasing through their platform at some point in the future. I guarantee you. Anyways, moving forward here, this is gigantic news. It's always nice to see cross-industry collaboration in crypto. I do believe Genfinity was one of the... Genfinity is obviously my company. One of the organizations that actually broke this news, Hedera and Algorand partnering to launch the Decentralized Recovery or DREC Alliance. For those of you guys in the Hedera community, Hedera ecosystem, you know that Dr. Lehman Baird, among others, I think Bank Social from Hedera, DLT Science Foundation, HBAR Foundation, there has been a massive pull towards the Decentralized Recovery or DREC initiative for well over probably a year and a half at this point in time. Now we have this announcement today that Hedera and Algorand ecosystems partnering in this initiative. Now, what this essentially deals in is a new mass market industry standard for key recovery. So custodying your assets, obviously. That is open source, interoperable, and secure across networks and wallets. To give you guys just a tiny bit of insight, I'm pretty sure some of the things that I've seen about DREC in the past. Essentially, think of like a mobile application. Think about portions of your private key being kind of split amongst people you would consider to be helpers. Think about a mobile application that kind of pings out to those helpers during given time frames. Make sure that they are still in custody of that portion. And yeah, if you ever lose your key, you would end up reaching out to the helpers where that verification has already occurred and then kind of reclaiming it. I have also heard that you don't need the full key to recover, so it's pretty interesting. I'm sure we'll be seeing a lot more information coming out about that. To kind of get just a little bit more into the weeds with this, Hedera and Algorand ecosystems, and Algorand's obviously a gigantic ecosystem, uniting to launch the DREC Alliance, a game changer in decentralized asset recovery. To give you guys just a brief overview, central to the DREC Alliance is the Decentralized Recovery open source protocol. Fundamentally, this protocol adopts an innovative method involving secret sharing among a group of quote-unquote helpers, which in turn empowers users to securely recover their digital assets. Furthermore, the protocol is designed to ensure confidentiality. Each helper's share is crafted to conceal any details about the original secret. Consequently, users can effectively reconstruct their secret with the aid of these helpers, thereby enhancing the security of digital asset recovery. I mentioned the organizations involved initially. I will say also this is not just an Algorand, just a Hedera initiative. Obviously, these are kind of, Algorand, Hedera, HBAR Foundation, DLT Science Foundation, Bank Social, I think Blockworks, I want to say, Algorand Foundation. These are just kind of the founding members of this initiative. As they kind of state within this, this is kind of a mass market solution. It will be very cool to see other ecosystems and other wallets coming into this initiative. We do know that custodianship of assets down to the individual level is one of the kind of confusing portions of mass adoption in this space. One of the pitfalls to telling people to come into crypto, and they get so confused they don't even know how to custody their own assets. Really cool to see this type of initiative coming to fruition. Bank for International Settlements putting this out. This is their BIS Innovation Hub. We know they've had multiple projects in distributed ledger and blockchain technology. This one is another one coming out of the Swiss National Bank and World Bank, launching Project Promissa to test tokenization of financial instruments. I've done videos in the past, obviously. I forget the name of it, but XX Network had an initiative through Bank for International Settlements. I believe it's still ongoing. There's been multiple of them. We've seen Quant Network involved in some of these as well. This one is called Project Promissa, though. This is to address the global challenges of the 21st century. G20 wants to deliver better, bigger, and more effective multilateral development banks through substantially increasing their financial capacities. Today, many international financial institutions, including multilateral development banks, are partly funded by financial instruments known as promissory notes, most of which are still paper-based. While the current system provides the operational controls for member nations to make subscription and contribution payments to institutions like the World Bank, the custody of outstanding promissory notes can be digitized to address operational challenges and enhance efficiency. Project Promissa is a joint experiment of the Bank for International Settlements Hub Swiss Center, the Swiss National Bank, and the World Bank that aims to build a proof of concept of a platform for digital tokenized promissory notes. The International Monetary Fund is participating in the project as an observer. Using distributed ledger technology, Project Promissa intends to simplify the management of the notes and provide a single source of truth for all counterparties through the notes' life cycles. That means that the government of a member nation and its central bank, acting as the designated custodian, will have a comprehensive view of all notes outstanding with different international financial institutions, and vice versa. International financial institutions such as the multilateral development banks will have uniform visibility of the outstanding notes held by different central banks. Long story short, the goal of this proof of concept and testing, or the goal is to complete this proof of concept and the testing by early 2025. Obviously, 2025, a little bit of an interesting time frame as well. A lot of the stuff that we've seen for, I think, the full ISO 20022 migration stuff and all these different dates kind of ties into 2025. A lot of the green initiative stuff tying into 2030 and even further out, but pretty interesting stuff there. Talking about the aspects of the SEC Twitter hack, and I mentioned this yesterday that they did not have two-factor authentication enabled on their Twitter accounts. You've got Eleanor Tourette. Eleanor is a Fox Business journalist, obviously. She's been in the crypto industry for quite some time at this point in time. Does some great deep digging as well. She put this out about an hour ago. I've been thinking about the SEC hack. If X or Twitter was correct in their conclusion that not having two-factor authentication switched on was to blame for the breach, then that could mean the agency disregarded, or the SEC disregarded, their own cybersecurity disclosure rules that they enforce for public companies. Rules for thee, but not for me. But would it also potentially violate a May 2021 executive order from the President of the United States that mandated federal agencies adopt multi-factor authentication and encryption for sensitive data? Could one argue that the SEC's official X or Twitter account, which has the ability to move markets, classifies as sensitive data? Pretty interesting post there. News coming out of Aleph Zero also. Really cool to see them bridging out and creating bridges to other ecosystems here. This is obviously pretty big for the Aleph Zero ecosystem. We know that they've got tie-ins with the substrate aspects and Polkadot. But it looks like Common, which is kind of their DEX aspect that has some unique privacy features, as well as Aleph Zero proper, is introducing what's called Most now. Now, Most is essentially going to be the bridge between Aleph Zero and Ethereum. Most will be the main gateway to Ethereum, enabling external liquidity and stablecoins to be moved between those networks and letting decentralized finance flourish on chain. Pretty cool. Connecting Aleph Zero to the Ethereum networks, or I'm assuming this might be EVM networks as well. Launching on test nets and mainnets of both networks. Simple and secure design, Guardian based. Given the announcement yesterday as well, you still see kind of Bitcoin sitting right around $47,000. I know Blockchain Backer and multiple others have talked about the 618 retracement level and where Bitcoin sits right now. I am certainly not a chart guy, but it is always interesting when you start pulling some of these fibs, where we start seeing levels of support, where we start seeing levels of resistance. You can do the same thing to the previous cycle here, 2018, down to the bottom. You start seeing where we might have some resistance. I'm pretty sure it was right around this area in October where we hit the 618. So pretty cool. I mean, obviously we need to break above. We need to start testing as support instead of holding it as resistance across these markets right now. I still, and I've said this multiple times, my belief is that 99% of the time price action is king and is going to dictate all the news regardless. Obviously, the ETF's a little bit of a different animal, similar to kind of the Jay Clayton suing Ripple 3 weeks before he left tenure. Back in whatever year that was at this point in time, 2020, I want to say. I forget it even at this point. Anyways, I hope you guys enjoyed this video. At the end of these videos moving forward, as you guys know, I do like to give a little bit of personal thoughts and reflection. This one is going to be a quote that I found interesting, which is refuse to be defined by someone else's vision of what's possible, especially given, most of us here in this space, whether you're just coming into this space or whether you've been here for a while, 2024 now in January, we finally get Bitcoin spot ETFs approved. A few years, we've been hearing about this for years. Thinking about all of the financial institutions, thinking about Bank for International Settlements almost on a weekly basis, putting out proof of concepts, dealing in blockchain, distributed ledger, and technology and crypto. Had a conversation with Darren Moore Jr. on some of the spaces we've done recently, saying we've almost been desensitized to the massive amount of adoption news that we've seen throughout crypto and distributed ledger technology over the past 3 or 4 years. We would have never seen this stuff 3 or 4 years ago, 5 years ago. What we are almost seeing on a weekly basis now. A few days ago, I talked about Aberdeen, a governing board member of Hedera, tokenizing a 15 billion pound Lux Money market fund. Aberdeen manages like 360 billion pounds under management. These type of announcements are like commonplace at this point. They're huge announcements. These announcements would not have been happening 3 or 4 years ago, 1000%. So refusing to be defined by someone else's vision of what's possible in context of the markets and adoption of these markets, I mean, we can see it playing out in real time. In context of personal capabilities and goals and dreams and whatever, I'm a huge advocate of the fact that nobody else has any idea of what you are personally able to accomplish except for yourself. I think that it's very important to ignore the noise. One thing that I think rings true within that first initial statement, though, is that, and I've seen this in personal life, I don't know if you guys have, people tend to hate what they cannot or what they are too scared to achieve themselves. By that meaning that, anytime that you say, like, even if you tell people in, your family, I mean, how many times have you had the discussion with your family, if you've been here for a few years and you've tried to tell them about cryptocurrency, distributed ledger, digital assets, things like that? It's like either kind of this weird combination of like fear or like judgment that's passed upon you by them, things like that. But I mean, make no mistake about it. Just because they're too scared to educate themselves, regarding what's actually coming, doesn't mean that it's not going to come. Same thing with what you're actually capable of. Nobody knows what you're actually capable of except for yourself. I am a fervent believer that making yourself uncomfortable and forcing yourself internally to do things that make you uncomfortable makes you a stronger person, especially in this space. I've talked about that before. If you feel like you want to contribute, there are ways to contribute. Crypto is a very small ecosystem. If you're unhappy in your current, role or your career or whatever else it is, I certainly don't recommend quitting your job. You need to make sure you have that level of sustainability there. But building up a platform for yourself in this space, making yourself uncomfortable, talking to people, maybe interviewing people, maybe hosting spaces, maybe trying to network or connect people if you see synergy. You'll never know what type of opportunities exist in crypto or blockchain for you if you never try to reach out and make some of those opportunities happen for yourself, because they exist everywhere. This is a small space right now still. It's not going to be small for much longer. Spot Bitcoin ETFs, obviously going live yesterday. They are just the first through the door. It'll be really interesting to see, if a digital asset like we've seen XRP deems not a security, or at least XRP on secondary markets, or XRP as a token in and of itself, which by that by that court ruling, obviously you can kind of assume that a lot of tokens may not be securities just in and of themselves. So what is going to happen across all of these different assets with longevity, assets that have a lot of liquidity, assets that have proved staying power? Bitcoin is the first through the door, but will certainly not be the last. Just like we see 12 or 13,000 cryptocurrencies on CoinMarketCap, actually CoinGecko, and like 2 million plus on CoinMarketCap is what it shows right now. I tend to believe that there will be a multitude of digital assets that have spot ETFs in the United States, and then further financial products as well. You can look at somewhere like Brazil, they've had ETFs live for a few years at this point in time, and not only Bitcoin, but I believe they've wrapped multiple assets into a basket for an ETF. So that is coming to the United States. It is coming quicker than we can anticipate. There are opportunities everywhere. Do not ever let somebody define what you are capable of, because the only person that can define what you are capable of is yourself. I hope you guys have a great rest of your day, and I will talk to you when I talk to you. Thanks. Bye.